Hi, everyone. This is Michael Bengiat with Lifetime Investor, and this is the Stock Picks Weekend Review video for November 25th, 2022. I hope everyone had a good Thanksgiving, and let's go ahead and get straight into it. There's our disclaimer. You can check it out. And as usual, we're going to talk about the current market environment a little bit, and then review the one stock in our portfolio, and then the stocks in our watch and ready list. So getting into the current environment, I feel like a broken record, but we're sort of in the same story we have been pretty much all year. So in my notes, a lot of times it's kind of just different ways of saying the same thing. We're just in a yellow caution environment, kind of bordering on red. The best strategy is still swing trading, taking profits as soon as you have them. If you're up at least 7 to 10% or more, at least taking some partials. One of our last trades, we were up 17%. We took some of it off, and then the whole thing reversed, and we ended up getting stopped out of the rest of it at basically break even. Not what we want to see, but that's the environment. So you really, and so far, you just can't hang on to stocks and hope that you're going to get a big move. End up giving back a lot of it or all of it, and that's just not the environment we're in. So that's where we are. We're just not getting leading stocks are just not acting well and have not all year long. The moves are all coming in the indexes where investors are piling back into the old beaten down names, the FANG stocks, the trade desks, PayPal, Square, HubSpot, all the tech names. They're all piling back into that to some degree. And of course, they're getting into some new names in energy and stuff and with cyclical names. But just overall, they're just not performing all that well. Every time we've gone into positions, we're either stopped out or they just don't go anywhere or they're breaking out after earnings. Just a very difficult environment. So, what'll happen is that eventually we will get into a great environment. So you just have to have some patience. Don't fall prey to FOMO because you see the index is rallying and you're not in anything. We're dealing with individual stocks and in ETFs, and not the index ETFs in this service. And so if you're an index investor, yes, you should be in QQQ or SPY, our market trend advisory service. We're at 100%. They're doing pretty well. But for individual stocks, this is where you'll get the outperformance, but we have to be in the right environment, and we're just not in it at this point. So we just continue to, look at names, buy a name here. If it's not working, we don't add. This is why we end up just with 1 or 2 positions and then back to zero because they're just not working. That's the whole thing. So keep your powder dry, keep your capital intact. So far we're down much less than the indexes. Many investors are down just huge because they bought and held. Many of these leaders they thought could never go down. Many traders are, lost half or more of their capital. So we're down like 6%, and that's really it. So which is, in a good environment, you get that back very, very quickly. But to get back from 50% down, you need 100% return, which is very difficult to do. So, just keep having patience. This is going to turn into a great environment. We just don't know when. So we just continue to test and buy things here and there. If it starts working, we add more exposure, but we're just not seeing it. So that's where we are. So let's go ahead and just take a look. Was Dollar General. That's our one position. You see, it's formed this nice little cup, but it's getting a little elongated, and now we've sort of adding on this handle. It's looking pretty good. I mean, it's nothing wrong with the chart. We bought it over here, but of course it turned around when it just broke out above this area, turned around, and so we're slightly underwater on it. It's not doing anything wrong, but we also have earnings coming up. And this has always been a problem, especially this last few months. Stocks either run up into earnings, and if you didn't buy them before, it gets too late, or they've already extended by the time the earnings come, or they don't do anything, and then or they go down, and then they have their big move on earnings. But there's been enough just blow-ups, crashes on earnings that we don't want to have anything going into it without some kind of cushion. So if we don't get the cushion, we'll exit the position. Um, but hopefully we'll get enough. We can even maybe take a little off, and we'll see how the rest of it does. So we'll see what happens, but it's looking pretty good. Another reason we got into the stock is that Dollar Tree announced earnings on this day. That was on the 22nd, I think it was, and that one crashed. But usually what happens is that you'll see all the names go down in the same sector together or go up together. But this one actually ended up rallying back to basically unchanged. So that was a really good sign that it was basically Dollar Tree's issues and not industry wide. So it gave us another reason why we wanted to get on this name, showing some good strength. Okay, so let's go ahead and look at our ready list. Okay, let's see. The first one is Lamb Weston, ticker is LW. Unfortunately, because I'm still traveling, I don't have all my notes here. But basically, we bought it coming out of this. This is our buy level here. We're in the buy range in all these stocks. There's actually 4 stocks in the ready list, so we're right in that thing. But I don't have the exact numbers in front of me, and I can't switch. I usually have 2 screens. I only have 1 screen right now. So, but it's acting pretty well. We're tightening up here, which is a good sign. And what we'd like to do is see it clear this 88. In fact, that would be if you're already in the stock. Again, we're not in it because we bought only one other stock and we don't want to add another one because it's not acting all that well yet. But this will be something that if you're in it, you could even, if it clears 88 on some good volume, you could add to the position there. But we have some nice tight trading here. Volume is dropping. So in other words, we're right below where the sellers have been lurking and we're just not, the sellers are not coming in. So that's a good sign. So we want to be watching. Now, on the earnings side, you can see the earnings are starting to be very, very strong. And sales are good. Nothing to write home about, but actually pretty well. Now, this is also one of these stocks. They deal with potatoes, so it's a defensive name, nothing exciting. But don't let that sometimes cloud your judgment. Like, well, I don't want to buy a stock like this. Since March, so we're talking 6, 7, 8 months. The stock has almost doubled, 50 to 86. Now that's a good move in this market. That's a phenomenal move. So you never know. Don't discount something because you think, it's boring, or I'd rather be in some tech name. Well, your tech name, you're probably down 50% or more. For this one, you might be up 80%. So we have to look at those biases that we all get as traders. And you think, well, no, I only want to go into this because it's a sexy stock and this and that. It's got all this buzz. If you're looking to make money, that's not something you necessarily want to always be in. You want to be where the money's flowing. And definitely these kinds of stocks are where the money's been going. Like this one's in the food packaged industry group, which is number 12 out of 197. So the money's gone there. It's not gone into tech. So, always kind of check yourself on when you look at a stock and think, well, no, I don't want to buy that for whatever reason. Think about the reason and say, is that really a valid reason? So that's a good thing to keep in mind. Okay, the next one on the ready list is Archer Daniels Midland. Again, food, grain, and related industry group. Now, this stock is really firing on all cylinders. You can see here, look at the earnings. 24, 37%, 62, 92. These are tech stock earnings that you've seen. Sales, very strong, almost above 20% for a long time. Stock is acting really, really well. Here we had a little area here. The buy zone just was a breakout on here. So we're just kind of sitting in the middle of the buy zone. I think we're actually at the top of the buy zone, but again, it's acting really, really well. Just a strong performer. It's not a huge mover, but in this market, it's done actually really, really well. So you can see big numbers in names that you think are just boring. So again, back to that same point. Okay, the next one, another sort of ag name. This is CF Industries, ticker is CF, and they deal with nitrogen fertilizer. Now this one, I want to show you the earnings first off over here. We just started off, we were actually losing money in 2017, then it was making $1 and change, and then suddenly in 2021 to $6.50, then this year it's $17.57. Huge, it's almost up a huge amount from 168%. in 1 year. And look at the earnings, triple digit earnings and very, very triple digit sales. And then coming down a little bit, but still 70%. It's phenomenal, really strong margins. This company is making a ton of money. These are numbers you will see in strong tech stocks, not in a agricultural chemical stock. But that's where we are. So you can see where we've just come out of this area here. We'd love to see it clear this 106, 109 area. That's where the seller has been kind of lurking whenever we get around 109. So if you're in it now, it's a break above that on strong volume. That would be a place to add. We like the fact that we're getting close to 109. Look at the volume. It's very low. We're not getting any sellers coming in. So the stock could be getting set up to the breakout there. And then on our next one, in our long-term outperformers, we have ticker is EXLS. That's EXL Service. This one's been on our list for some time now, but it's been a really great performer over time. In fact, let's take a look at the monthly quickly. So this is what we like to see on these long-term outperformers. Just nice, smooth, over years and months, just nice. This one's a little more erratic than some, but this is actually a pretty good chart. And we're starting to see nice, strong volume, even if this comes up here. So let's go back to our daily chart. Now, it's been a little bit of a choppy ride. We've tried to get on this, but you can see, look, it had a plunge here. I can't remember why. It wasn't on earnings and just came straight back. A lot of this kind of action we've seen this year. And then it's been a real kind of a chop fest up here. So we're trying to get this one. Let's look at, yeah, so we can see it a little bit clearer here in a weekly chart. We're in the buy range over here at this kind of consolidation pattern. A lot of good 1, 2, 3, 4, 5, 6, 7. Let's see, 1, 2, 3, 6 weeks up in a row. It's very strong. We'd love to see that. Also coming into new highs. Let's go back to the daily chart. It's just a little choppy. It just seems to be kind of stalling out up here around the 182 to 187 range. So, but it's looking pretty good. We'd like to see this tighten up a little bit more. And that would be another great place to get it if you're not already in the name. Okay. Let's now go to our watch list. The first one is ticker is PWR. And it's Quanta Services. They're in the heavy construction building industry group. Has formed a nice little cup with handle here. It's gotten a little volatile. It broke out into the buy zone and it's been kind of just vacillating right around in here. But this one we're watching, we want to see if we can get it breaking above this area over here. You can see 149. It's been in area 148 where it's sort of the sellers end up pushing it back down. But now we're back up there, low volume. We're not getting big sell-offs. That's a good sign. So this one's on our watch list. It's got good, strong, good earnings and sales. Nothing wrong with this company's doing it really, really pretty well. Next one is Dollar General, which we've already talked about. And then we have next one is ESPN. This is Epsilon Energy, oil and gas exploration. This one's a little more speculative, but it's setting up nicely. I say speculative because it's a low price stock. You know, we're just at $7.50, but great numbers, overall rating of 98, good growth rate, very strong earnings and sales. I mean, look at the numbers here. That's just really great margins. So you can see here we've got almost like a cup with handle. This is actually, yeah, sitting as a cup with handle. It's tightening up here. We really like this. So we're trying to buy it on the breakout over here. Little caution there, the RS isn't as strong as we would like to see, but overall, but it's a nice smooth trader. We like this. It's not giving us tons of volatility. Sure, there's always sometimes when you are, but this tight trading is nice. Looks like we had a little shakeout over here, came right back. That's a good sign. Sort of, that's the function of handles. You want to get rid of the final weak holders where and they're in here, and then they just a couple shakeouts, get rid of those people, and gives you the impetus to take off without those people kicking you out. And then finally, we have one last stock, ticker's Expo. This is in the long-term outperformer, Exponent. Well, let's take a look at the monthly chart first. Yeah, now this is a very nice chart. You can just see nice, just continuous upward movement, staying above all the key moving averages. Now here, because we're in the bear market, we came down to this 40-month moving average, and now we're bounced off that. Now, ideally, we'd love to get it right off of this, but it just didn't give us in hindsight, you go, oh yeah, I would have spotted coming bouncing off of this because it's always bounced off of it. But in hindsight, it's easy to say what you should have done. At the time, the market was just not in a place to have bought it. But we're coming back up, and so we're looking now to buy it. It's getting above the 21 month. Let's go back to the daily. Yeah, you see nice tight trading, and we're trying to buy it of the break of this cup with handle. So we like this nice low volume. It's right around this old highs. It's not giving any reason to get out. Now they're in the consulting commercial services area. Pretty good industry group 25 out of 197. Earnings have been just continually growing. All in all, it's a solid company. It's a sort of small to mid cap on the smaller side. It's looking pretty good. It's just a nice, strong player. Continue to do very well over time. That's it. So we'll be back next week. Hopefully, we'll have some more, be able to put on some more positions if the market improves. Otherwise, we just continue to watch and just look for the best candidates that are not, giving too much volatility or have already just taken off. That's it. Okay, we'll be back next week. All right, thanks.